Ray Dalio's Pure Alpha 2 flagship fund suffered a loss of 18.6%. And then it turns out that the strategy was not profitable after all, and it's better not to play games with the market, and so on. Does this mean that Bridgewater collapsed and it's time to get Dalio off the financial Olympus? Welcome to the Coin Post. Bridgewater Associates, the leading global hedge fund of Ray Dalio, got a loss of over 18%. I suggest we figure out how it happened. That the best hedge fund manager couldn't make any money at the bull rally since mid-March. In fact, he managed to get into some pretty bad stuff, which led to a loss of 50 clients at once. And in the end, let's try to draw conclusions from the situation, because it's always better to learn from the mistakes of others. Get yourselves comfortable, turn on your financial skills, and subscribe to the channel, please. Let's get into it. It was the Fortune that reported of Bridgewater Associates' problems, and according to their data, the following happened. Since the beginning of 2020, Ray Dalio's Pure Alpha 2 flagship fund suffered a loss of 18.6%. Given he's been biased against the market and stated it was necessary to turn to defensive assets due to the upcoming market collapse, it's logical to assume that the March collapse wasn't the cause of the problems. Moreover, as a result of those terrible events, the media reported that Dalio only increased his capital. But then something went wrong. Apparently, they were counting on the second wave of stock market collapse. They followed this behavior until the end, which stopped them from jumping into the departing stock market train and making money on its recovery, and even on setting new highs on several companies and indices. It's reported that after such bad 6 months, only 300 out of 350 clients now trust Bridgewater Associates. And those who left, they took out $3.5 billion worth of assets from the company. Overall, Dalio's hedge fund is estimated at $148 billion, so this should not be a major problem. So far, we're dealing with an unpleasant trend. As to the reason for the bad choice of market strategy, they blame the computer models, which, under the COVID-19 conditions, misread the markets, but they found out too late. How could this happen? Next. And let's give Dalio the thumbs up so that he can deal with all the problems. Each of us, whether you buy shares, trade in currency, or invest in Bitcoin, secretly wants to beat the market. And the moment we see a profitable deal, we feel like this is a lucrative strategy and it's gonna happen every time. And then it turns out that the strategy was not profitable after all, and it's better not to play games with the market, and so on. So in order not to trust your gut, many people want to put decision-making on a machine, a robot, or a program, you name it. One that can process a huge amount of information and make decisions that won't be influenced by personal emotions. Ray Dalio, according to the sources inside Bridgewater Associates, is directly involved in setting up the computer models of his fund for market analysis. We know that the fault was caused by the coronavirus, as it's impossible to calculate everything. However, Dalio would spend 70 hours a week working with his analysts and programmers during the active phase of the pandemic. They disabled models that failed and created new ones. Nevertheless, the error was deeper and their actions actually made little sense. I mean, of course, without them, they might have lost even more money, but the fund lost lucrative deals and made some bad ones. Most surprisingly, not for the first year, and after the March collapse in particular, Dalio insisted that the markets would be inflationary and that it was time to put money into gold. But why they couldn't get out, if not in the red, then at least at the expense of gold and silver rally, remains a mystery. The problem might have been that Dalio had too much faith in his computer models, which he paid a high price for. I'm sure each and every one of you stumbled upon an ad of a super retail bot that you can just turn on and it's counting your profits. But you know that in this case, only the bot creator makes money, and traders and investors lose their money as soon as market conditions change and the bot program becomes ineffective. Those who are professionally engaged in these commercial robots, I mean not to sell and make money, but to make money for themselves, they know that every programmed strategy has its lifespan, and each bot must be monitored by a person or another robot who will shut it down as soon as it starts to dump the deposit. Dalio also had these robot analogs, and even though they didn't trade, or maybe they did, because all of these developers are strictly confidential, but they did give market advice. And as we now know, it turned out to be totally wrong. Does this mean that Bridgewater collapsed and it's time to get Dalio off the financial Olympus? Let's discuss it in the comments. In the meantime, I'll quickly remind you to click the subscribe button and turn on the notifications. As you can see, there are some incredible things happening on the market, and we're gonna analyze them with you. This is a cautionary story because the rule "never try to outsmart the market" works absolutely for everyone. And even the head of the world's leading hedge fund, a recognized financial guru with a huge team, computer models, can get in the red. Another important lesson is that you should never blindly trust your strategy and always consider different options. Because like I said, Dalio gave the right advice during his interviews. At the same time, when managing the investment portfolio of his own fund, he trusted the models they built earlier. As to whether Dalio will be back in the game, well, first of all, he is not out yet. His fund still has enough billions of dollars. They identified the problem of the loss, and that gives a chance to eliminate it. Secondly, in practice, Dalio once went bankrupt and had to borrow money from his father to pay the bills. But then he managed to get back into the game and get listed on the world's richest people list. If you want to know what helped him rebuild his company from scratch, check out the video I made on the principles of success by Ray Dalio. I'll leave the link in the description box. Let's see if they can help him again. Share this video with your friends so that they know that even billionaires can't always predict stock market behavior. And that's it for today. Thanks for watching. It's the Coin Post channel. Subscribe and get enlightened.